And that means we are live here on our YouTube channel, Tackle Trading's Halftime Report, our daily show where we break down all the news, the action, the information in the markets that we think is important, and give you guys some insight and some clarity into what to go about your day with. We've got a big show here today, fun show as well as always. We got Frank the Tank, Frank Martin here, Breakout Frank, whatever nickname you want to give him. I like him, all of the above, to join us to break down some of the chart information and action. Frankie, how you doing, sir?
Doing good. Yeah, you can call me anything. I've always been called worst. But as always, excited to be here hanging out with the crew.
We also have Matt, Mark, and Cody as always, and lots to unpack here today. On today's show, we're going to be talking about the jobs report that came in, actually better than expectations. We'll take a look at some of the numbers. We'll talk about what the implication is, if it actually means anything in terms of our analysis. I'll get everybody's take on that. President Trump overnight actually added Tencent to the target list of companies from Chinese, kind of censorship and whatnot they're going to be doing here in the U.S. and WeChat. Yeah,
that's a big
I don't think people understand the importance of the 10-cent one, and it goes with a lot of these Chinese companies, guys. But when you're targeting TikTok, it's like, oh, it's just TikTok. Do you know how many different American companies Tencent has their greedy little fingers in?
A lot, including Tesla, and Spotify, and
including Activision.
Yep. Okay.
So it's going to be interesting to see if that ever does play out, or if it really, I know they signed the executive order, but I mean, how does Tencent, WeChat, BitDance, Baba, Baidu, do all these companies have to dissolve all their ownership in any American company? Because we're talking, that would be very, very, very difficult.
Mm-hmm. Mm-hmm. Well, why don't we start right there with FXI and bring that up, because that was big major headlines overnight as well. And bring that chart up if you can. Marky, give me an update on what's going on with the Trump executive order, this 45-day timeline, what actually is playing in here. And then let's talk a little bit about these specifics of these companies and what it might actually impact. Mark, what do we know from this?
All right. So late on Thursday, Trump, he cranked up tensions with China and signed orders to ban American from transactions involving China's BitDance. Is it ByteDance or BitDance?
ByteDance, I think.
ByteDance, I think, but call it either one. We all know it.
That's TikTok's parent company, and WeChat, which is owned by Tencent. And that's to take effect in 45 days. Furthermore, the Trump's Working Group on Financial Markets recommended that Chinese companies currently listed on U.S. exchanges should be delisted if they do not become compliant with U.S. accounting standards. And, to throw on a little one China drama on top of the fire, the U.S. is moving to sell high-tech military drones to Taiwan, which, that is going to not be good. We're going to have a technology war. We're going to have a technology war between us and China. Now, what China has done, because the Trump administration has been constantly poking China, poke the bear, consistently for 2 months. China's response, as we saw when we closed the consulate here in America, was a tit-for-tat response. I think you can expect a tit-for-tat response targeting American technology companies in China.
Does that, obviously, Mark, we talked yesterday, and we've, talked in recent history about the concern that, the increasingly Chinese U.S., tensions to a certain extent have impacted our personal desire to trade Chinese tech companies. But now that we're targeting specific companies out of China from a technology and IP perspective, does that give you some fear over the Apples, the Microns, the AMDs, the Oracles, the Broadcoms? Literally almost every U.S. tech company does business in China. Does that give you, tech has been the driver here, does that give you some concern about tech?
Well, I mean, that has always been on the table, and this goes back to 2018. Like Micron, for example, in 2018 had a horrific spill in price just because of its exposure to China. So that has always been on the table. But if you do not have, you are literally a reckless gambler if you do not have real legitimate concerns about American companies with exposure in China after this action. I mean, China has shown they'll do tit for tat. You want to roll the dice, you want to roll the dice, then you're gambling right now. And I firmly believe that, because China's going to do something, right? So
they're not going to stand idly by and watch an American president dictate what they have to do with Chinese corporations and not have anything to say about it. Of course not.
So if you want to be like, well, I'm going to gamble and this company is not the company that's going to be targeted, listen, Tencent down 6.5% today. I mean, you want that to be your trade? Like, listen, you got a million things you can trade in the market. Like, why you would target anything with exposure to China right now for a trade? Hey, man, you're brave. I mean, it's not even braver, because you're braver than me 364 out of 365 days a year.
Well, I want to get
you're just downright
specific here, though,
foolish,
because when we're talking about Chinese exposure to U.S. companies and hypothetically what the Chinese response is going to be in the face of Trump signing an executive order basically banning many Chinese companies from doing business with American companies, which again is a much, much, much bigger deal than what people on social media are making fun of, because they're making fun of it right now. Mm-hmm. It's a much bigger deal than just, kids on TikTok. Again, the list of American companies that have some type of Chinese exposure is a massive, massive list here. So if China does come back and say, you know what, tit for tat, we're going to ban American companies the same way, because Trump didn't just have BitDance and Huawei here. They had Tencent guys.
Yeah. Bring up TME if you can here, Matt, that Tencent Music Entertainment. Obviously, it's not the same as the parent
go to
company.
TCEHY.
Okay.
That's the parent company.
Is that the holding company?
TCEHY. Because Tencent Music is just a spin-off.
Yeah.
So I mean that's a big gap down on news targeting the company. You want to go further. Old Fastly, our friends at Fastly, FSLY, a little double down 10% day after day. Like, exposure to this situation is obvious. You can find out who has exposure, who's at risk. Like, it was known that Fastly has exposure through its revenue on TikTok. You got huge move down in Fastly. You got huge moves down in Tencent. And it's like, I don't have any sympathy for individuals that were chasing the dragon when there's this known exposure. I mean, it's just, there's so many things to invest and trade in.
Well, we didn't. Hold on. That's a little unfair, though, Mark. I mean, we didn't know Trump was going to sign an executive order 24 hours ago that targeted further than Huawei. We didn't know that.
They have been not further, but with Fastly, we did know the TikTok rumblings for what, a week now, week plus?
I know, but that seems like somebody who doesn't like momentum breakouts, throwing a little shade. I mean, that's what that felt like, because that's just not a fair statement when nobody in the world knew Trump was going to extend this to such a degree in such a short time frame. There was not anybody in the halftime report or anybody in media this week that was talking about an expansion like this. They were talking about BitDance and Huawei, and now all of a sudden we're talking all Chinese tech. No.
But Fastly and this TikTok exposure, I mean, that was known, and we've been bashing. I mean, Trump's been bashing TikTok for over a week plus.
No, I get it, but again, that has nothing to do with Tencent.
No.
Shocking news: the creator of the character Max Loss does not have sympathy for I get it.
And my main point is, if you wake up on an Apple trade and it's down 3% because China targeted Apple, it's just, there's a lot
I know,
of
but you
smoke here.
can't stop trading Apple here. I mean, are we going to just say the entire market is off limits now because, you know, Trump and China don't like one another?
Well, it's how much exposure do you want to the potential risk? You know,
I mean, if you want to eliminate Chinese risk from your portfolio, you better only look at small and mid caps that have underperformed the market for the entire last 2.5 years.
Listen,
that's not, no, like
I still
Facebook,
own
for
some
example,
Chinese trades. I gotta
Facebook
tell you.
has almost zero exposure in revenues to China, for example. You know,
Well,
so there's
this comes down to trader preference, though, doesn't it? I mean, you can still.
Oh, I
position
don't think
price and
you
still
can
trade.
say technology's off the board here.
Right.
No, I wouldn't say that.
Yeah, it is startling adding the 10 cent in here. And by the way, such a much bigger deal than any of the other companies you guys mentioned, in my personal opinion. 10 Cent Music, they have diverse holdings, quite frankly. They own 5% of Tesla. They have a 5% holding stake in Tesla. Are they going to have to sell their Tesla stake?
Well, and I think that's where my frustration lies with this. It is not with what President Trump did in terms of targeting certain companies out of China. I would have had no problem if he would have stuck to the Huawei and BitDance routine. I would have no problem with that. But now that you're expanding it to basically any Chinese tech company that he can name, it's like, okay, do you understand the confusion that lies in? Because does Tencent have to close out their 5% in Tesla? Does Tencent have to close out their 5% in Activision? Because Tencent owns, like, for the gaming community out there, guys, they own big time brands in the gaming community.
Okay, let me read a few. League of Legends, Fortnite. They have a stake in Activision. They also own a lot of production companies that make a lot of the coding on the back end of video games, Frank. So, I mean, it's like they're big into
and they
gaming.
have a lot of stake in American technology companies outside of the gaming. So that's where my frustration lies is, did the administration take the time to really understand the depth of this conversation? Because it seems like it expanded really, really quickly without understanding how far reaching these companies actually have their little fingers in American companies.
My read on it, Matt, quite frankly, I think
and hold on. Why force China? Why not just go to the American company and say, dissolve your interest in Chinese tech?
Well, that might be what's happening next after that.
But why not do that first?
Yeah, I would say start with that. But Matt,
because it's politics.
Credit. You're giving the government credit for knowing what they're doing.
This is a political move.
Yes,
this is not a security move.
But I get that. But when you're making a decision that has this type of far-reaching impact and it leads to confusion, that's the frustrating part right now, is the confusion of what this executive order actually means. Is it just TikTok? Is it just one aspect of the company? Or are we talking full wide reaching dissolving of Chinese influence and interest in American companies? This is a very confusing executive order, and it doesn't seem to make a lot of sense to me right now without understanding that far reaching impact.
Yeah, it doesn't make a lot of sense to me either, quite frankly. And it just feels like a political move,
Again, if you came out and said, you know what, American companies, you got to dissolve all the interests you have in Chinese tech firms, or, American companies, if you want to do business in America, you have to dissolve everything you have in a Chinese firm. Listen, I would disagree with it, but at least you know the parameters of exactly what it means. That's my frustration. And I think that's the frustration for the market, because the market doesn't hate positive. It doesn't love positive, and it doesn't hate negative. That's not how the market works. The market hates uncertainty. That's the number one thing traders can't stand. And I think a policy decision like this, made in such a short time frame, leads to that confusion to traders to really understand, okay, how far reaching is this, and how big of an impact is this going to have on these types of companies that have really been the leaders of the market post-pandemic?
The broad markets are not reacting much to it. Obviously, these specific names are. I mean, obviously these big headline kind of news, Frank, it's going to be all over Twitter, all over social media. Even the gaming kids are out there talking about it now. Frank,
Yeah.
do you think there's market risk here from this continued story?
No more than there has been or typically is, I would say. Doesn't mean I'm right, but I think Matt nails it. It's more so now we have to think about what this means, right?
Yeah, there it is, Frank. Thank you for saying it. There it is.
and I'm not gonna, if I figure it out, it's just gonna be because. All right, I might be wrong, I might be right, but it really won't be because I'm awesome if I get it right. So
No,
it really is
it's
that
because we got lucky on the guess of trying to understand something.
Exactly. And so that
right?
for me is, I could understand if you are a little concerned, but I always take the philosophy, if you are always concerned, there's always something to be super concerned about, right? Just it changes over time. That's why I always just let the charts do my talking for me. My brain likes to look at pictures and not have to think that much. So I don't know what that says about me, but that's the approach that I'll take. I mean, I have no objection. I'm generally not a big Chinese tech stock guy anyway. I don't really, that's not really my thing. But I wouldn't fault somebody for pulling back a little bit because at the end of the day, it's your money and it's your trade, and you should always feel comfortable. And if Mark's not going to be comfortable in a tech stock, why should he be in one?
No, of course not.
Regardless of what his reasons are, he doesn't have to explain to me what he's going to do with his money. And so, don't feel bad about that. But I'm not going to fundamentally change, I guess my approach, at least based off of the information we have today.
Yeah. The broad markets are kind of stalling here today. The Dow flat, the S&P flat.
Hold on. I'm not ready to get off this.
Well, no, we're not.
I want to be clear in what the message is from you guys, because I don't want to leave our community with a message that is confusing to the same way that all of us are a little confused from the government's message. From the coach's standpoint, Chinese tech firms at this point, they were off the list for me. Chinese tech was already off the list. Tim, I think you were Mark. I believe Chinese tech is off the list for you as well.
Correct.
Yeah, Tim.
I'm still playing them. Yeah,
you're still playing them, Frank.
Yeah, I'll still play.
I'm not, but it's generally. I mean, I'm generally not. But yeah, I would. I would be fine. Trading tech, and I'm not going to eliminate Apple because of reasons. But Chinese tech stocks. Yeah, like I said, they're not my thing anyway, so business as usual. But if they were my thing, I would probably shy away from them.
Cody?
No, the only Chinese company I trade is Baba.
Yeah, it's off the list for me. I think there's too many American quality companies and too many good technicals and trends to focus on. I think if you can remove that risk from if you can remove the exposure of that risk from China right now, at least as much as you can, I think that's a smart thing to do. Now, Mark, when we were going through the hot and heavy Chinese trade war, what were those industries that were really, because Micron took it on the chin initially back then, correct?
Yes.
Okay, but not every company in that space took it in the chin. No, so what were in just your experience?
Apple took it on the chin.
Yeah.
In the trade war. That's the thing that if you're new trading Apple in this new market, Apple got obliterated to the tune. Let me go find the week. There was a week with Apple where it broke the 20-week moving average without even a support test. You go back to the period of late 2018, and you look at some of the situations there. But more importantly, go back to the time period of May 2019. So the trade war came in these waves. Like if you go to weekly chart,
I'm on a weekly, Mark.
Yeah, so there was that, and the whole market was selling off specifically. But if you go to the May 2019 time period, so go to May to 2019, Apple got obliterated on trade war news during that stretch. That's a good 15% clip on Apple, and that was 100% trade war. 100% trade war.
So sometimes, Mark, real quick, sometimes when we're going through these parabolic moments, we don't realize how many corrections a company has had unless you look at it. And, Apple's had 3 fairly substantial corrections on that weekly chart in the last 3 years.
And so it's my words of caution.
Wait. Stocks don't sell. What are you guys talking about? That's
I
fake.
know.
That didn't happen. I mean, don't tell me that.
And specifically, a poll was taken in the last couple days, and Chinese consumers overwhelmingly came back in the poll. Trust the poll for what it is, right? It's from China.
Yeah.
You can't trust the data, but they specifically favored a targeting of Apple products in retaliation. So, like, when I say hesitancy on Apple, there's real headline risk. I mean, this isn't some, max loss, dive into the deep. Oh my goodness, if this happens and this happens and this happens and this happens, then something might happen. We've seen the price action on Apple before in a similar Chinese tension situation. Doesn't mean Apple's not a great company, right? Doesn't mean Apple doesn't have.
Oh, I would love a pullback on Apple to 400.
But from a realistic short-term trading point of view, do realize that the headline risk isn't hypothetical. It's the type of thing that could pop up any day. And specifically because China has shown the tit for tat. The tit for tat. You do something, we're going to match it. We're not going to exceed it, but we are going to match it. And so I think that headline risk is really, really real right now.
Yeah, but it would not surprise me on any one given day to come in and see Apple down 4%. But that also doesn't change my opinion that you can trade Apple. Just because you have morning headline risk and something that can gap you 4% doesn't mean you have to avoid the company.
No, I agree with that 100%. It does change the short-term analysis though. And more because Apple's elevated, overextended, that type of thing than say if Apple was sitting at support. So, if Apple's sitting at support, I wouldn't be nearly as concerned about it than if Apple is sitting at an overextended resistance level. It's just in my opinion.
Well, that's where you differ from Mark though, because even a perfect pattern, Mark would avoid a trade. Correct, Mark? Doesn't matter what the setup is.
I think the concern is amplified 100-fold because of what Matt just said on the technical conditions.
Right. But let's say that you have perfect technicals, Mark, you still wouldn't take a trade in this space because of the perceived risk, correct?
Well, I day trade anything, but sure. Once again, if you have a similar pattern on, let's say, Facebook, let's play the equal game. Let's say you have 2 good patterns, right? And one's in Apple and one's in Facebook, or one's in Apple and one's in Amazon, or whatever it is, right? I don't know why you would take the Apple risk when you could trade a similar pattern. So all things being equal, take the other pattern is, I guess, my final thought on the matter.
I think that's fair. When you're
Yeah,
coming up with a pure tiebreaker, I think that's more than fair.
If you have 2 equal trades and one does not have Chinese exposure, you take the trade that does not have Chinese exposure.
I mean, that's just where I'm at on it.
Yeah, I agree with that. And let me finish my point on the resistance really quickly. If the market is sitting at support versus if the market is sitting at resistance, news impacts that market differently. It just does, and it has since ever I've been a trader.
Well, you don't have to go back very far, just the last couple of days, right? Earnings, stocks at the top of the chart, a lot more negative reaction than stocks at the bottom of the chart. So, there's just more, because the higher it is, the more things are priced for perfection, right? And so, when things don't go perfect, there's just more risk when you're at the top of the chart.
And not just that, Mark, but think about one of the things we said on Wednesday night's webinar when we were talking about rookie trading. When it comes to prospect theory, people are more quickly to lock in profit than they are to accept that loss. And so when a stock is at a support level, it's been coming down, 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 down. They're more willing to accept the risk at that point than they are with the market up, 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 up. They're more willing just to lock in that profit. And that's why a market will respond differently at a resistance point than it will at a support point. I'm not sure Apple's down 2% if it's setting in between the 9 and the 20 EMA, the 9 EMA and the 20 SMA today. Same news. I'm not sure we're down 2% on that news. But when you're elevated like you are in Apple or any company, really, you're just emotionally, psychologically speaking, you are more prone to lock in profit at the top end of the chart.
How big is 10 cent in valuation, Mark? Do you know?
Oh, it's huge.
It's like-
massive. I don't know the exact market cap off the top of my head.
I'll get you a number here in 15 seconds.
We're talking about like the size of almost a Facebook or a Netflix, right? Somewhere in that 400 billion higher mark, I think.
Oh, they're massive.
A
I don't know.
massive company.
Like $680 billion.
So here's a question I have for you, Mark, specifically. There's been this perceived market risk from the U.S.-China relationship, and there's continued perceived market risk. And I'm with you guys. I understand a trader saying prudently, if I've got equal trades, I'm going to avoid Chinese risk. But you had the U.S. president come out, sign an executive order, barring and creating complexity with a $600 billion major player in China, and the market's down 0.1%. Does it remove the market risk for you, or is it more specific company risk now? Because it's not playing out in the market. The broad markets don't care.
Well, I mean, you know, the Qs are down 1%, right? That's heavily on the Chinese tension news because a lot of those companies have exposure. It doesn't have market risk unless it gets worse. And we've seen that with China all year long, right? There's been a million headlines that could have sent the market down.
Mark, if the polls were tighter right now than they are, do you think this would have more risk? I mean, we are 3 months from an election that our president is trailing in the polls quite significantly right now. Do you think the market is like, you know what? Maybe this is only a 3-month thing. They're just bypassing it. They're not taking it as serious as maybe they should.
Well, I think we're in a bubble, you know, and I do. And so when you're in a bubble, bad news, it takes a lot more than a little bad news, right? To send things down.
Well,
I think
especially on China, since we are very, very prone to negative news on China over the last 3 years.
Mm-hmm.
I mean, we're it's almost like I tell Frankie, you were built for a pandemic. Like at this point, we've had so much Chinese news in the last 3 years that maybe we all have a little bit of Chinese fatigue from a news perspective.
No, you know, when you woke up, you know, it's like when I was talking to Tim this morning in our morning market meeting, I was like, listen, on a day like this, because COVID continues to run rampant, we have headlines saying stimulus deal, you know, on the brink of collapsing. You have the situation with China escalating. We have us selling drones to Taiwan, which is an under the radar. I bet you didn't even catch the headline that Trump reimposed aluminum tariffs on Canada, and Canada has threatened to respond. Like that, you know, in a busy day like today, like, you know, that headline didn't even, like, that would have been like huge, massive news 18 months ago, you know, huge, massive news. But we got so much news, and what's the S&P down? 0.2%.
Mm-hmm.
like we're in a bubble. The only thing the market believes in right now is that the Fed has their back. Liquidity is there. Liquidity, as long as liquidity is there to prop up this pseudo market, you know, I don't think anything matters, because I don't think fundamentals matter to the market. Now, something will come along, right, to tumble the dominoes. But man, if you can't go down more than 0.2% on that level of news today, man, I think that really says where we're at.
I think it says a lot about the S&P and the broad market. By the way, maybe the most interesting index for me today might be the Russell 2000. Mm-hmm. In the veins of the conversations we're having here today, risk internationally, all that kind of stuff. I mean, what is the Russell 2000 chock full of? U.S. companies, and it's up.
Companies with very little exposure internationally.
That's right, Matt. We got a little breakout there.
You're breaking out of 1550.
I mean, that's the old playbook, right?
Yeah.
Trade war, China tension, everything sells, small caps up. That's the classic trade war playbook.
Mm-hmm. Matt, is this breakout tradable here?
Well, yes, but personally, I'm not taking any trades coming into the weekend. I think this is a weekend where you got to kind of let it set up, let those 48 hours kind of happen. Let's see the news over the next 48 hours. Let's see how the futures market performs on Sunday night. You know, coming into that cash open on Monday. You know, there's nothing that I've seen in the last 24 hours that takes you away from your bullish perspective on the marketplace. You're still bullish until trends break. Can we all agree with that?
You are
Yep.
bullish until trends break.
Okay.
Yep.
So we're all still bullish, but I do think in the back of your mind, you're a little concerned just with the escalation we've seen in the last couple of days. And so I think giving it 48 hours over the weekend, seeing that futures market open on Friday, on Sunday, the cash open on Monday, I think you wait for that, Tim. But we will probably be going through the small and mid cap index today a little bit more, closely than we have in recent history during the scouting report meeting to find some of those plays in small and mid cap stocks that don't have Chinese exposure.
You know what's up
technically-
today?
Go ahead,
Go ahead,
Frankie.
Frank.
I was
Go
going to say,
ahead.
technically on the rut, I agree with Matt. Generally, I'm not looking to add a whole lot of new things on any Friday, so this one would be no different. But there's really, no resistance till 16, right? It's basically, so we have room, I guess, is what I'm saying, technically, to between where we are today. So I don't have to chase into it and be uncomfortable over the weekend. I would agree with Matt on that point.
No, and this is why I always strive and advocate for diversified portfolio, like having your dividend stocks, diversifying your plays. You know what's up today besides small caps? Every dividend paying stock on my list. There's some themes here. Not a lot of exposure to China. Altria, Walgreens, CVS, Southern, Lockheed Martin, Waste Management, all in the green today. This flight to yield, this flight to non-Chinese exposure. It's why I like to play in lots of different areas, because it really, really, really can make days like today keep you in the green. Keep you in the green.
It's quite a visual heat map there. There's no question about it. Obviously, you're seeing the pressure in Netflix, CRM, Adobe, those high flyer tech type names that were doing so well there for quite some time. And a little rotation one day here into real estate, industrials, and others. Yeah. And the utilities
finally getting some life.
A couple of nice little breakouts, utilities too. I'm sure we'll talk about a few of them in the scouting report meeting. Back on the broad markets for a minute here. I do want to move from China and talk about the unemployment report. Matt, if you want to bring up Forex Factory, you can, or we can talk about it generally. Market came in better than expected, obviously 10.2%. As you went through the data and kind of looked at it, obviously you're going to get headlines like the biggest 2 month of job gains in the history of the market and all that kind of stuff. We still got 10% unemployment and 17 million continuing claims of people who are unemployed. Marky, what did you see from the jobs report?
Better than expected. Trump signaled it a couple days ago, right? When he's like, hey, big thing, but unemployment fell to 2.2%. There was about a 1.48 estimate, kind of the average there on jobs that were expected to be gained, less than the 4.8 in June, but final number came in at 1.763 million. Once again, the trend we've been seeing in the jobs report, the trend we've been seeing in the jobs report, it's just overshadowed today by the stimulus breakdown and by China. That's a China stimulus. That's a really 1-2 punch. And normally a monthly report has had a lot of, highlights, and let's focus on that, man. It's just the wrong day for that good report to come out with so much other heat hanging over the market.
Matt, do you take this as a positive or just a neutral, or do you just kind of dismiss it? How do you read an unemployment rate at 10.2 that came in better than expected based on that quote unquote headline? What's your take on it, Matty?
It's very simple. It's my take I've had for the last couple months on the unemployment rate. I think it's a report that is being dismissed by the market right now for the most part. Because it's going to be headline news, no doubt about that. But I think this report is a very inaccurate report right now. And I don't think I'm the only one in the market that believes that.
Yeah, I don't know how you can trust any of the information or even use it as market action. What's going to be interesting.
Again, I think there's massive manipulation in our economic reports, okay, especially in the inflationary reports. But I don't think it's manipulation here. I think this is a very, very difficult moment with so many things changing from a labor perspective for these managers to be able to accurately predict their labor numbers. I just think it's a very, very difficult, a difficult job to get this report accurate right now. It'll get back to being accurate, right? But it's a very volatile time with many, many, many changes. And this is a surveyed report. So I just think it's a very difficult thing to get accurate right now.
I saw yesterday, Matt, a couple of Fed governors were saying at the end of the year, they still expect 8, 9, 10% unemployment. So I don't think this labor situation is going to clarify itself until we're probably into 2021, quite frankly, and pass all the stimulus stuff. And as things really shake themselves out, I just don't. I really don't.
I believe real unemployment is closer around 17 to 20% right now than it is 10%.
Yeah. Based on participation rate numbers that we've seen and all that kind of stuff.
And
If you include contractors, it could be even uglier than that.
Tech sell-off has accelerated ever since we started the haltime show.
That's
over the
kicked
last
up a little
30
bit,
minutes.
yeah.
Cap and trading must be pulling in some profit right now.
Listen, they didn't like our tone of negativity, apparently.
It's not negativity, it's caution.
And listen, don't worry. Jay Powell will come out in 4 minutes and say that we're now buying super duper bonds, and we're now
buying bonds with a maturity rate of what would that be, 2,235.
Yeah, so
I read a stat. I don't know if I got this right. I'm going to have to confirm, but I read a stat today. I think they said that the Fed bond buying program is $2 billion per hour at this rate. $2 billion an hour. It's startling to even think about, wrap your head around.
They're really good bond day traders.
Well, they have unlimited money. Of course they are. As I'm looking across the market, the economic report here, obviously not that big of a deal. I don't think it moved the needle quite much at all. I do think the stimulus conversation can move the needle. And Cody was even asking me earlier today, hey, Tim, do you think they're going to get a deal done this weekend? And I'm like,
I said deal or no deal.
And I'm like, I don't think they will. I really don't think they will. Mark, tone on stimulus conversation. What do we know there?
Let me ask you a question really quickly on stimulus.
Yep.
It does seem like Trump is going to handle this through executive orders at this point. That's kind of what it seems.
That's where it's heading.
From what I read, those executive orders are basically expanding all those things the Democrats wanted anyways. $600 in unemployment benefits, a moratorium on federal evictions, all of that. The only thing that's not in those executive orders is state and local government funding. So if you're the Democrats and you're getting extensions on that, why would you negotiate?
Wait. So basically the strategy of argument is give us what we want, or Trump's going to come in and give you what you want.
I didn't think those executive orders would go as far as Trump's pushing them. And
those
executive orders look pretty.
I don't think the Dems can claim a win, even if he does that.
No,
if they don't get state funding,
nobody can claim a win in this.
Right.
Nobody wins.
By executive order, he can't create new, but he can always adjust old. So he could actually extend out some of the older stimulus packages.
That's Cody. That's kind of what my take was, is that it's an extension of the deadlines that have passed. Is basically
he can do that by executive order. He can.
Yeah, and basically what you're doing is you're buying more time. Is what you're doing.
You're going to have a local government crisis on your hands if you do not get some funding to those, regions, though. Tax revenue in New York is down 37% year over year that they use to facilitate.
I agree.
In California, it's down 42%. Oregon down 53%.
Is that the federal government's responsibility to fix the problems in California and New York?
No,
it
is not. But it's not their job to fix all these other problems they've been fixing either. I don't think anybody can claim.
Listen, if you want to point out the political hypocrisy, we can talk for the next 8 hours, right? Mm-hmm. I mean, but again, I'm not. Politically speaking, it is not the federal government's right to fix all the problems within the states.
Mm-hmm. Mark, you think they're going to strike a deal?
I agree with that.
Man, I still bet yes, because I've seen political theater far worse than this, and deals come out of nowhere. You go back 40 years, this isn't the first time there's been a deadline and people throw their hands out, and then the next thing you know, a deal. So I'm still betting yes, but there is always somebody playing election year politics and trying to out strategize the other person. That's always possible. That's always possible. A couple of our favorite companies that we all like selling off in this tech sell-off right now pretty hard, Activision and AMD.
Yeah.
Both big sell-offs in the last 30 minutes, breaking intraday support levels on AMD, breaking intraday support levels on Activision. And when you go up really, really fast, there's not a lot of support on the way down. And so you got big sell-offs in both right now. Two great companies, two companies we all love.
God, please, God, give me a pullback.
Please give me a pullback in AMD. I don't care what the news is.
Wait, yes, this is good.
So
we should all send a thank you card for this pullback in AMD. I love
Absolutely.
the starting of this pullback.
Yeah, because we still are in bubble economics right now, and I do believe pullbacks will get bought up. I think
bubble economics is not changing.
Yeah,
Maybe ever, but not in our lifetime. So I mean, listen, this is like a video game, right? Video games are front and center with all this China stuff. It's like a video game. AMD is a great company that the market loves. Activision is a great company that the market loves right now. They're just getting caught up in the crosshairs right now of all this news.
Mhm.
So basically, it's like me playing Black Ops with my son. I just run and hide for a little bit.
Yeah, run and hide for a little bit, and then come out and snipe it.
Okay, well, no, I come out and get sniped, but I get the analogy.
I'm looking at a graph right here on my side, just thinking about the whole conversation about stimulus and executive order and throwing money back into the problem. We now have the highest debt to GDP ratio since World War II, Matt, and we're pushing that. We might even beat that here this year if they keep pushing this money into the middle. It's going to be
greatness.
interesting.
Oh, we're screwed long term,
Yeah.
right? It's just make money, stack some gold, buy some canned goods, do what you can, because it might not happen for 7-8 years. So.
Yeah. Back on the broad markets, we'll get to individual companies here in just a minute. We've talked indexes. Let's move into commodities if we can.
On the stimulus, a few other just notes on the stimulus.
Mhm.
The deadline is today. The self-imposed deadline. They had a 3-hour meeting last night. Both sides said little progress. And talks on the brink of collapse. Is the market headlines today. So there's. I don't even know if they're meeting today, but the rumor is that Trump could do something as early today from an executive action order. So It's good theater.
Interesting. What another one that's good theater. I'm going to call an audible on crude oil here, Matt. Give me Amazon real quick if you can. And actually, it's a broad theme I do want to talk about. Bernie Sanders back in the news here, Frank, and that man has a way to find his way into the headlines.
Bernie's so cute.
He is proposing a bill that will put a tax on gains made by billionaires only between March 18th, I guess that was the bottom of the pandemic, probably when the market hit the low, to January 1st. And the biggest actually payer in this one would be Jeff Bezos, I think about $48 billion based on Amazon capital gains that has affected his net worth through stock holdings. Elon Musk, $27 billion. Obviously a very, very hard left proposal to tax the rich, like we've seen from Bernie for years and years and years and years.
Called a hard left proposal. I do not dislike Bernie Sanders. I don't agree with Bernie Sanders on almost anything, but I do not dislike him. I think Bernie Sanders is consistent in his political belief system. I think he cares about American individuals. He's fought his entire life to protect consumer rights. There's a lot. I have a lot of deep respect for Bernie Sanders, but again, I do not agree with his politics. This is insanity to me. You cannot tax unrealized gains, Tim. You can't do that. You cannot tax I get it. It plays so well in the headlines.
So
billionaires make billions while people struggle, but they have not realized those gains. If you want to have a true conversation, you have to talk about capital gains. You cannot talk about taxing unrealized gains. That would be a nightmare scenario where all you basically do is tax things that are fake. Unrealized gains are not real. They're fake. It's paper. It's a digital footprint is all it is. So what's going to happen if Tesla goes down by 70%? Are you going to give those taxes back?
Yeah. Are you going to open up the purse strings and give the money back if the
Seriously,
market
this-
crashes next year?
Listen, Bernie, you play to the headlines, but this is a bad decision. It doesn't work economically. There's no way to track it. It goes along with his message. I get that, but this makes no sense to tax unrealized gains. It
Mark,
makes
any,
no sense.
Mark, any chance a bill like this gets passed in your
No.
estimation?
Dude, it's 2020, man. I wouldn't be surprised if green aliens showed up and put on the next version
Well,
of Hamilton.
And calm down. I said that on Twitter. Calm down. I said, "Hey Bernie, instead of hating on the investor class, why don't you take all of those taxes and fund financial education in America so that American consumers can participate in those gains the same way Elon Musk does and the same way Bernie Sanders does?"
Listen, an anti-billionaire stance is going to be very popular amongst the populace. There's no question about it. Bernie has his bros, and that's not going away. I can't imagine this actually happening, though. I mean,
Matt,
No.
because financial education takes work on the individual. It requires the individual to actually put in some work, and they don't want to do that.
yeah.
No, but we
It's
force the
easier- it's
individual
easier
to
to-
take other classes in public school, though.
It's so much easier to blame the billionaires and call them evil versus to actually take individual responsibility yourself and learn financial
Listen,
education.
yeah, it's okay until those billionaires aren't creating those jobs.
Yep.
Bernie's in the headlines. I don't see this thing playing itself out.
It plays to his base. It's
Of
kind of like
course.
Trump plays to his base. Bernie's
Yeah.
playing to his base, but it makes no economic sense.
Yeah,
You can't tax unrealized
You
gains.
can't tax
it
unrealized.
doesn't make any sense. Actually, you cannot. No,
Makes a good
that's-
tweet.
Even the Bernie bro of us, Tim Justice, like this makes no sense.
Well, because if the market crashes next year and your Amazon's at $1,000 a share and it loses 70% of its value, what are you going to do? Give the money back? We already said it, but you just can't do it. It's not logistically possible to do it. So
What's going to happen? Black ops come raiding down on my house at 4 o'clock Eastern, saying, "Mark, you made $300 day trading today. Where's my $100?"
yeah, we want the
like, come on,
$100.
like,
Yeah. All
And
right.
I do agree with Adam. Federal taxation is illegal.
Yeah. Well,
Oh, no. It was illegal up until 1913. Yes, it was.
they've been doing it legally for 100 years. So
No, they've been doing it illegally.
all right, fair enough. They're still taking it. I still got to pay my taxes. I got to tell you that.
I'm not saying don't pay your taxes,
hey,
but
when the mafia comes shakes you down, you pay them off.
Yeah. No, I
That's
know.
what it is. But that's all
pay the
the
mafia.
federal. You pay the mafia because they shake you down and they can do bad things to you.
right.
They can still go to hell.
Yeah.
You know?
I'm with you on that one.
Right. Let's move through the markets in terms of commodities, metals, and all that kind of stuff. I do want to get to individual companies. There's not much I'm seeing in crude oil here, Mark, down about 1%, but stuck in the same range we've been in for some time. I'm going to get Frank's take here first, just technically. Frank, how do you approach a situation like this that is literally just compressing?
You wait.
Yeah.
You either cash flow it, right? And it's been a great place to cash flow. Directionally speaking, you wait. And look at that pinch that's developing between the 50 and the 200 there, Mark. I like that.
No.
Maybe
Tim
that'll force the issue.
Tim was talking about, listen, we got Tim talking about that last week. He's like, is that a pinch between the 50 and 200 developing? And it's like,
Hey, you don't give Tim credit. That was me that asked you that question.
listen,
maybe they
you
both did.
millennial. Like, I know you need support for every good thing. Just go spend the money on your Facebook.
Did
trade
Cody
already.
just ask for a participation trophy? Is that totally the millennial thing? to do?
No.
Cody,
Participation is
send you a blue
recognition
ribbon digitally,
for
buddy.
effort given.
Mark, you break out of the 200. Is that tradable for you?
Depends on the catalyst for me. Technically, absolutely.
Okay, reopening the economy. You've got positive
Yeah.
economic data, manufacturing, spending, all that kind of stuff.
Yeah, you got a reopening of the economy and a break of the 200. That's a nice little swing trade that would, with some legs to it, up to like in the 52, 53 range, in my opinion.
Matt, you nailed the technicals on this. You said that the breakout of the pivot was not tradable. You thought that the 200 would kind of smack it down. It did. We talked about it day over day. Now that it's just kind of continuing to compress, whether it's next week, 2 weeks, 3 weeks, break the 200. Is it tradable?
Not for me. My analysis is going to be the exact same over the last week and a half on crude. I need a break of the 200 followed by a retracement.
Then the
I need a
retracement.
higher low here. Is
Hey,
basically what I need. I need a support bounce here.
and to continue the thing, I mean, the fundamentals behind oil are not decent. Rig count numbers just came out in the last 10 minutes, down 4 again. I mean, like, they keep cutting and cutting and cutting and cutting. So that production element that has been such a weight on oil for the longest time, man, and you just don't just start 100 rigs the next week, that's going to be a slow process, and it's still trickling, declining. I mean, so the supply side in America, the fundamentals behind that are about as good as they ever have been. So if you can just get a real spark in COVID curtailing, economy opening up, that's a pretty nice backdrop for oil.
Yeah, but that's going to have to play itself out a little bit over time. I'm with Matt. I actually really like the idea of a breakout pullback. Then I can play something. I'm probably just on a wait here, Frank, for some time. Let that pattern.
Will you let us know when you place a bullish oil trade?
I will, Mark. I'll let you know in the morning so that you can.
Please, because there is zero chance that I will. I'll place double the trade, whatever you trade. And I don't care, because I refuse to let you make money on oil and me not be there. So I will double whatever trade you make.
Dude, you'll be the first one I call. I promise you.
All right. So
yeah, I got you.
Well, when you guys do that, I'm shorting. I'm taking opposite end.
So.
That's funny. All right, let's look at metals. Little profit taking day here in metals, guys. Obviously we've had just incredible runs across the board. That's a pretty big fat red candle, but still above the 9 EMA. Maddie, obviously not going to change our fundamental read, long-term reads, any of those kind of things. The investment thesis. Does it change any way you might manage that trade right there if you were in a
gold?
trade? Well, silver more specifically. I want to look at both of them.
I wouldn't do anything with gold. I don't care if gold goes down at all. I really don't care. If gold goes down to 2,000, I think that's 9 EMA momentum buying on trend. If it goes down to 20-day moving average, you're talking about a bullish retracement traditional. And if it goes down to 1850, you're talking about a position type weekly buying opportunity. Until this trend is broken, and this trend is not broken in my opinion until you get back down underneath those moving averages. No, I mean, you might be looking at this saying, hey, let me lock in some profit. And I wouldn't fault anybody for locking in profit on anything at the top end of a channel, right? I mean, anytime somebody locks in profit at the top end of a channel, that's good. Congratulations.
Yeah, always makes
So that
sense.
was a long-winded way of saying buy the effing dip.
It was, yes. Any dip should be gobbled up.
Oh my goodness!
Are you kidding me? Did you guys listen to Karkashi yesterday on CNBC?
I didn't.
You should buy any dip on gold. The Fed's going to lose their mind.
Buy dips on gold constantly. Keep doing it.
Listen, if there's only one thing you understand, the Fed is now targeting a higher rate of inflation, guys. If that's all you understand, you should buy every dip on gold.
All I know, as long as you don't mind swearing, one of the funniest videos you'll ever see, and there's a lot of swearing in it, but go to YouTube and put in buy the dip, and there's a little cartoon video from Extra Normal. It is hilarious. I've watched it about 7,000 times.
And I'm just warning you, you'd be going down a rabbit hole with the different types of videos online about buy the dip mentality.
Like it really,
you're Alice in Wonderland at that point.
At the end of the day, it just explains it all, So yeah, but there is some foul language. So
that video, was it Matt or Frank that showed it to us in the meeting last week? Also a little language, but those Robin Hood kids that were buying Carnival Cruise Lines long, but also give me Royal Caribbean just so that I can hedge my position.
Yeah, that was good stuff.
That was completely hilarious. Matt, gold, obviously not much of a change there. I will tell you, probably the one metal that does grab my attention is copper here today. Palladium, platinum also looking ugly on their candles, but I don't really care about that right now. We can talk about that later. But copper, Mark, obviously the news sensitive to China, it always makes you think copper a little bit here. We're still above the rising 50, but that is a fat, massive red candle on high volume. Mark, what does this tell you, if anything? When I think copper, I think China, and obviously the news today. So,
well, here's the thing. This is, once again, you're getting the trade war playbook today. Dividend stocks hanging steady, small caps skyrocket, tech sells off, copper tanks, oil down. This is 100% the trade war playbook that played
We're
out.
going to have to update the trade war playbook here.
You know, so like, is the ferocity of the move surprising? Yes, but it is not like if you trade it in 2018, if you trade it in 2019, you know what happens on true fear. But what copper does is it lets you know that the markets are actually paying attention to China.
Yep.
Like that's what the copper move really does, and it is the confirmation that this is an unemployment report. This isn't stimulus that is driving the markets down today. This is China tension fear. Copper confirms that. And so in the trade war, copper had some ferocious moves to the downside. As China is one of the biggest consumers of copper, as a trade war or a tech war or escalated tensions threaten to disrupt the general economy, copper is a leading indicator of fear. Copper is a leading indicator of economic activity. And it just one thing, I mean, and copper was near resistance, you know, top of the chart, like Matt was talking about 15, 20 minutes ago. When things are at the top of a range or up above, this type of news can have a real adverse effect. So
go ahead, Mark.
Oh, I just one last thought on it, you know, and so like companies like FCX realize that you can get some pullbacks here because of its sensitivity to copper. Now a deeper pullback of $1, another $1.50, I'm going to buy up on FCX. But that's what's going on today. It's not cataclysmic for copper or FCX or anything like that, but just realize that when you're at the top of the chart, this is the trade war playbook. And so it's not surprising at all. It's going to be really fascinating if you have any follow through on Monday.
Well, and Mark, this is also the difference when you do see a sell off when something actually breaks support versus what gold is doing. Gold is coming down today, not because of anything that happened with China, guys. Gold's coming down today simply because you had a positive unemployment number.
It's that simple.
It really is. When you're looking at the chart here, gold at the top end of the channel, break this down on a 30-minute chart, you're neutral going into the unemployment number. It's right there. And then all of a sudden you see the sell-off on the labor news, okay? But on gold, you're not breaking any daily support levels. You're just coming down underneath an intraday support level, and that represents a buying opportunity. Just a little profit taking on some, you know, positive economic news to a certain extent. But when you're looking at copper /HG here, there is a vast difference when you're breaking an intraday support level on some negative news, positive news for the economy, negative news for gold in the short term. But what you're looking at in copper is you have that same degree of negative news, but now you're violating a neutral trend. Gold was in a bullish trend violating intraday support levels. Copper's in a neutral trend short term violating a daily support level. And what happens and why you're down 4% on copper and only 2% on gold is because when you break those daily support levels right there at 286 by 284 on the daily perspective, once again, coming back to the daily, you see that 284 handle by 286 handle right there on the daily support level. When you break this down on an intraday, look what happens when you break 286 here, guys. Massive volatility to the downside. Well, the fundamental difference in that is the fact that investors and traders have stop losses underneath that daily support levels. And so they're on copper, they're saying, okay, we're willing to maintain bullish to take the trade above 3 if it maintains that 286 handle. If it doesn't, it gets gapped. It comes underneath that support level. Stop losses get hit. Volatility pushes copper to the downside. There is like when you're looking at copper versus gold, the analysis is not even remotely similar.
Yeah, I know. And what you said is just sums it up. Like if you go back at the last couple unemployment reports, gold didn't have a good day, right? It's just computerized sell-off. Oh, because this is the computerized sell-off. Oh, jobs are lowering, which means there'll be less need for stimulus and Fed support in the future. And so gold has this like algo sell-off on those type days.
Wonderful point, Mark, because this is not investors selling, guys. This is algorithms selling that simply got the number of 10.2 versus the expectation of 10.5. That gets priced into the market, sells initially. To me, this like I'm not concerned about gold at all. Copper, copper's a stay away from me right now.
Yeah. So unless you think that there's going to be less stimulus and Fed intervention and funny money printed, realize that this could provide another nice entry opportunity next week.
Let's keep pushing through. By the way, Frankie, obviously there's a lot there to unpack with those charts, and that copper chart was breaking down. Now, I want to get your read on silver here real quick, guys, because I know a lot of our Team Tackle members have been playing that silver breakout and everything. Slightly different candle, different analysis from two different perspectives. Gold's an investment vehicle. Silver is also an investment vehicle, but also a trading vehicle. Matt, do you take profit, lock profit in on silver, though?
So silver's a different beast for me from an analysis perspective. Obviously, an industrial metal doesn't have the inflationary protection mechanism that gold has. It hit its 30 target and it came back down. Yeah, you're going to manage it, like I said yesterday, through stop loss management.
Yeah, you're going to treat it much more. Well, I would be treating it much more like a swing trade than a position trade, like I would be in gold. I do think that we do look for the next bullish setup on it. What exactly that is, consolidation, pullback.
Can I sign you up for a high base breakout of 30 there, Frankie?
Yeah, especially if it takes us like 2 weeks to do it. That'd be nice. And that would be certainly probably my preference. Pullback would be on the table.
Pullback to 26.
It just will depend. I mean, into that zone, that's a good, place to kind of guesstimate, but we're early, right? If we're trying to play, if I'm looking for even a new re-entry on gold, I'm probably waiting for not today's big red candle, right? So it's just development, but I don't think there's any reason on silver, at least based off where we're at today, not to be thinking about this is just, we did ding 30, right? It did have a huge week. We're above every ton of momentum. So yeah.
If I were to put silver on the scouting report this week as we did last week, how many vetoes would be on silver right now?
I would veto.
Everybody would veto it because you just need development. It's just you can't really, unless you're blind, buying or selling, I suppose, on blind faith. Where's your technical pattern here today? Right.
There is
nothing that we
need to let it set up.
So we have to let it set up. So yeah. So, I would definitely keep them on a watch list, but I would certainly not expect them in the reports.
Let's take a peek at the dollar, crypto, and then move into individual companies here, guys. The dollar actually trying to find a little bit of a support down there, Maddie. Strong jobs number, popped it up off the low there, finding 25 on the UUP. The index kind of hitting a double bottom as well. Still very, very bearish, obviously. Nothing changes for me fundamentally. Matt, how do you read the chart, though?
I read the chart very similar to I read it earlier this week when you asked me if this was forming a retracement. Yeah, it is. It seems very choppy right now over the last few trading days. It does remind me a little bit of this previous movement where you set that lower low, form that retracement, consolidated, good positive economic news here, drives the market back up. I would say you're probably looking at more neutral, waiting for that ultimate breakdown of 25 on UUP here. And so, Cody, what do you think?
Exactly
is that kind of where you're at?
Yeah, if you can look at the DXY, I know that it won't show up here, but everybody on your own end, if you look at the DXY, you can see that, it had a pop today. We're getting a base starting to form. So if we do get a retracement, we'll probably be back to $94, which is about $25.50 or so on the UUP chart. But after that, I don't see necessarily a full-on retracement or even a break of any sort. This is just moving into a neutral range. There's so much going on between trade war, stimulus, everything. The dollar's it's in a wait and see right now. So if the dollar's in a wait and see, then we wait and see.
I think what we're going to do in the scouting report meeting is probably upgrade a little bit, but still maintain a bearish ranking on it.
I can agree with that.
Okay.
Yeah.
I just love Frank when he said today's big red candle. That seems like a good brand name for something, like a YouTube little video. today's big red candle. It seems like it's the next
This is a
HBO
big red candle in the market in the last week.
it's like the next HBO miniseries. Today's big red candle.
Regardless of what's happening in the market, doesn't it feel like the S&P is going to hit that all-time high though?
It does. Absolutely.
Yeah.
Oh, make no mistake, just because there's caution on particular companies, listen, until Jay Powell gives you permission to sell, you just move money around from one trade to another and just, manage that. So Jay Powell is not giving you permission to sell. Until he does, trade accordingly.
Mm-hmm. I'm more concerned about this market over time once the money dries up, though. I just can't imagine they can continue to push the money.
There's Timmy the Bear.
Yeah. I'm sure we'll get there at some point. Nothing else in the broad markets here, guys. I do want to move into some individual company news. Matt, let's start with T-Mobile if we can. TMUS, cell phone carrier company. They actually had earnings and came in and they beat by 2 cents over their estimate, I believe, and kind of came in with some pretty good numbers. They also announced that they were the number 2 mobile carrier in the marketplace. Mark, do you have any interest in cell phone carriers, this kind of company? Consumers, they got to pay this bill. This is a utility almost at some level if you think about it.
Yeah, I've liked the Verizon, AT&T, T-Mobile, like all that as one of these safety boring plays. Buy at support, play if you want. I mean, realize that you can get nice price movement off of support levels, but rarely do you get like explosive, huge moves. But I don't mind that, right? Because once again, not everything has to be a home run trade. I can have some trickle trades. So you get like nice signals on, nice technical signals on any of the wireless companies. I think they're nice, boring trades to be had in this area.
Frank, a gap out on earnings like that after a long consolidation makes for a very interesting chart, in my opinion, for a couple of different reasons. There's so many different ways this could set up over time as it develops. What would you want to see on a T-Mobile post earnings that had a strong positive reaction out of traders, and what would you want to see from a gap perspective here?
A really good example would be to look at UPS. UPS really did at least one of the things that you like if you're looking to trade post gap, and if it holds its own, right, and just kind of consolidates, keeps creeping, but keeps kind of keeping that same level of resistance over a time period before ultimately breaking out. Now UPS really got cooking today, so the size of today's candle you never complain about. That's not necessarily what my expectation would be, but you do want to see that new price development and either going into a sideways range, right, pulling back into the 9, or high basing like we saw here, are all ways to go about it. It's really hard, in my opinion, to trade the earnings gap the next day. Some people would like to do that, and they're probably better at it than me, and so there's no shame there. But that's what I would like to see, is some sort of repeatable, identifiable movement, right? And I think UPS is a really good example of something that gaps up, holds its own, and then gives us another bullish signal, a week or so later.
Mm-hmm. Yeah, that UPS chart is beautiful. By the way, its counterpart. Go ahead, Matt.
And very quickly on T-Mobile's earnings report, not a robust EPS beat, not a robust revenue beat versus expectation, but revenue did increase 61% year over year, quarter to quarter. So when you're talking about T-Mobile having that type of growth year over year, quarter to quarter, that's a very impressive number, but it's really on the backs of what created that massive increase in revenue. The merger with Sprint is really paying off for T-Mobile right now. Mm-hmm. T-Mobile is now the second largest provider in the number 1 economy in the world from a cell phone perspective. And that Sprint merger from last year is really showing the benefits of the revenue in this quarter.
Mm-hmm. Mm-hmm. Yeah, no, I agree. And obviously,
I do have a question, Mark, in terms of, because I would put T-Mobile into the dividend value, kind of maybe not to the level of Verizon, but does T-Mobile's strength give you a little bit a more foundation in belief than, say, Verizon right now? If you had to pick one or the other.
Both companies I play at support levels. So that's where I sell naked puts at. That's where I look to buy. So wherever that support is, it could be a little bit higher like T-Mobile, or it can be a little bit lower. I just think they make excellent support bounce plays. Like support, you get a confirmation day, you get a confirmation maybe 2 or 3 days, you get a break of interday or multi-day resistance. I think they make good pickups. I remember one time we were talking about at the bottom, and there was kind of a bearish setup, and Tyler, he had a funny line. He made me laugh because, you know, so it's like, well, what is this? Because from a technical point, you know, this was like a few weeks ago when Verizon was above the chart, and it's like, well, what do you think about a bearish trade? And Tyler said, why? What do you think it's going to do? Go down $1? You know, like
Say that.
he did say that. It made me laugh because it's so true. Because these dividend type value plays, when they get down there at the bottom of the chart, it might be a good technical. Unless there's some kind of news or a huge market sell-off, yeah, maybe they go down a little bit, but eventually rotates for a couple weeks. So that's how I would play it. Look for support areas, whether the top of the chart, the middle chart, or AT&T at the bottom of the chart, because you got one of each, right? AT&T at the bottom of the chart, Verizon kind of in the middle, and T-Mobile on top.
All right, let's play the game, because T-Mobile did just surpass AT&T for that number 2. You obviously have Verizon number 1 cell phone carrier, T-Mobile number 2, AT&T number 3. Now, very quickly, we're all going to play the game. So when we all play the game, that means halftime report. You guys play the game too. Are you looking at T-Mobile positive earnings report, breakout of the all-time high, momentum in T-Mobile right now? Are you looking more at the AT&T bottom end of the channel, bottom feeding, like potential to break out of 30 here post earnings? Or do you prefer Verizon reclaiming that 200-day moving average and breaking out of that 200-day moving average? Obviously, you're not going to play all 3. Which one do you like the most? Let's start with Frank.
Give me Verizon. I'll take the one in the middle that's got the cleanest entry right now. You know, that would be a breakout in my personal opinion.
It would be a breakout for me too.
I mean, we've got a ways to go before our next level of resistance. I don't have to worry about maybe a backfill that I might, you know, have to be concerned short term on T-Mobile. AT&T's kind of stuck in the mud and no real clear signal. So for me, it's Verizon.
Okay, Tim.
Give me AT&T.
Okay.
I'll take the opposite side of it.
You like the potential of the bottom feeding, AT&T covered calls, capture the dividend, potential, you know, upward movements to 34, 36, 38 if things go great. You just like the potential here.
Well, there's such a nice pocket there if you can clear resistance. I really do like the upside there. And if you're not, you've got a nice little floor and dividend and all the things that would go around in AT&T. So give me AT&T.
Mark?
AT&T. I have a naked put at 29 on AT&T. So
Yeah,
that
you knew whichever one was closest to the bottom was Mark's choice.
Yeah, come on, listen. It's got the biggest yield at $29, or even if right now you bought outright, AT&T's yield will be close to 7%. Their dividends appears to be safe by all investigation of mine. But once again, I keep never getting put. I would like some dividend stocks. I would like a portion of my portfolio yield 7%. Nice little support level there at 29. Give me AT&T. Plus a billion levels of historical support in this 27.
Oh, yeah.
Oh my goodness. This goes back 35 years on AT&T.
I mean, you go to a monthly chart, go to a weekly chart. Like, I mean, so I love picking up dividend stocks when I got like tons of historical support levels, you know, underneath. So like from $25 to that. So yeah, I just got lots of friends that can help pick me up. So
AT&T has such a historical pattern here. It's like whenever it gets into that 24 to 30 range, like there's so much support historically there. I mean, AT&T usually gets gobbled up for that from a historical perspective. I kind of like AT&T down here from a dividend play, cash flow play, cheap entry historically on AT&T. I'm a little biased against AT&T because I hate DirecTV. I hated that merger.
I hated that so bad too. I thought it was like, it was a terrible purchase.
I just hated that. It just changed it changed the dynamic of what AT&T was and where we're moving from a technology perspective. So, but I do like the historical analysis on AT&T, and obviously it's a good little dividend play. Verizon, I kind of like that breakout, like with you on Verizon, Frankie. T-Mobile, I like the break on T-Mobile, but I'm having a hard time trying to assess a value play now acting as
I don't think T-Mobile pays a dividend.
Mm-mm.
You know, and so
They do not.
that puts you in the price appreciation.
It puts you
only
more in the
mode.
price growth area.
And like, listen, no, I don't like those. Though I don't like
Yeah, there's-
companies that are boring companies that don't pay a dividend. I mean, no, that's just like price appreciation's cute, but like, man, I'll go like.
I just don't think you should treat this space as a growth space.
Yeah,
No,
I mean,
I
I'll
agree
go
with that.
buy a dip on Activision if it occurs, or something where I can get some growth. You know, like there's a lot of places I can play growth, man. Telecom doesn't.
So I
Right.
think AT&T won. I think AT&T won.
It looks like it.
But me and Frank, I'm going to go with Frankie with Verizon.
Nothing wrong with the Verizon call. Obviously, a very, very strong fundamental company. So if you're buying, into that kind of strength, you might even catch a little break up there. So I get that perspective. Next one I want to talk about here is Uber. Now we're going to have a different conversation. Obviously, these are not value companies that pay dividends. Uber, the ride-sharing company, they actually, came in with their revenue of a decline of 29% quarter over quarter, I believe, Matt. They reported a loss of 102 versus the 86 cents that was expected. Stock didn't really take a huge hit here. I know it's down like 5%, but we're coming back into a mess of moving averages and all of that kind of stuff. Had a huge 4-day run here, guys, into earnings, missed the earnings. Marky, what's your read on Uber here? What did you take from their report?
Listen, I don't know. Uber is going to suffer from some Tesla problems coming up, where there was that stretch in time where people wondered if Tesla would ever make money. And it really created some volatile lows on Tesla when there was genuine fear that they would never make money. And, I'm starting to hear that chatter on Uber. It's like, great concept, right? But is it a great business? Like, hey, ride sharing, great, it makes society better, but is it a great business? And man, their window to profitability is in question even without a pandemic. But as the revenue numbers showed, I mean, that's a big hit decline. Now, it's not Live Nation decline, it's not casino decline, but that's a lot fewer people hopping into a car. Mm-hmm. And so an already troubling business model. And that's obviously weighing out on the market too. How many sexy names have just taken off and gone to the stratosphere? Uber's a sexy name, but people don't believe in it right now. They're really starting to question, like, yeah, it's cute.
Wait, a company that bleeds billions every quarter in a pandemic of ride sharing. Yeah, I can understand why Uber has not participated.
No, and Lyft's getting hammered on Uber's earnings as well. The two tend to trade together a lot. LYFT, they're getting hammered on as well. And listen, I like trading these companies because you can have nice moves, right? They trade well on breakouts. They trade well on breakdowns. One of the few companies that.
Can we all agree with this one premise? We probably shouldn't be looking up to pick up a stock that is a major growth stock that has not participated in perhaps the biggest growth market in our history.
Yeah, I think that's telling, right? Like, I think that's telling because, like, hey, look at Penn National Gaming continuing its breakout today. All kinds of problems, but people believe in the company.
Yep.
People believe in the company. Like, in a market where everything is going up, Uber and Lyft, well,
no, not
people don't
Let's
participating.
that buy rate and get $80 on Lyft treating you, Jim Cramer.
Oh, that was the IPO buy thing. He came out. He was pounding the table on that.
He has never. I wonder how much money he got paid because he has never pumped up a company as much as he did Lyft coming into the IPO.
Jimmy Shill. Frankie,
But don't question the Fed.
On either of these, Lyft and Uber, obviously they're stayaways from that perspective. I mean, just from a neutral consolidation, could you trade this to the downside if you get a breakdown? Could you trade it to the upside if you get a breakout? How do you approach a situation where you're like, okay, I don't really believe in the company, but I'm a chartist. Now we're post earnings. We've been consolidating between 30 and 35 here. What would you even be watching for, if anything, Frank?
Lyft, hard to say. Nothing, at least as it is right now. Uber, technically, if we see buyers willing to come back in off of this, I mean, we did kind of break yesterday, the day before earnings breaks. If we were able to follow through that in price development over the next week or so, I guess you could probably call it a breakout. I mean, it's hard to see exactly how it looks, because you need quite a bit of development, but there's so many choices. I can't see a scenario where, it's got all that stuff on the left. It's a choppy mess, right? Not a lot of great stuff to say about it fundamentally, which that's not a huge deal for me from a trading perspective. But again, as tiebreakers, right? You're not going to trade everything. So honestly, I could see somebody maybe talking about a break of that yesterday's high 2 weeks from now as a bullish signal worth at least investigating. But as of right now, that's about all I could see. This is a mess. You can do better, and you should do better.
Yeah. Zillow next here, Matt. Just a couple more from me, just from a news perspective. Z, if you can. Now, obviously, I mean, if you have sold a house or bought a house, you know who Zillow is. They're that real estate company that does the online database that people could go and search for, that are posting their homes out there.
Very popular website.
Very, very popular. And with, everything's going on right now, we've seen pretty strong residential real estate numbers for a couple months. We've been talking about that ever since we had the podcast with Brandon Diaz. Mortgage rates are at lows. Obviously, they've got an incentive to do something with that, cheaper interest rate and whatnot. Zillow came in and they just blew out revenue a little bit here. 768 million over the 615 million expected. They also were expecting a loss, but they came out and broke even. And the CEO said that this was better than we had hoped for, and we had a great quarter. Breakout here at the high here on momentum. Pretty interesting concept. Maddie, you have interest in this company up here?
Yeah, not up here. No, I don't. But with the market response to a fairly decent earnings report, a very popular company, especially in the real estate space. I mean, if you're in real estate in any capacity, you know full well that you probably use Zillow, right? A lot of people use this company, so it's a pretty decent little company. But I don't have interest in chasing it, but it is on my radar. I think it should be a watch list candidate.
Mm-hmm. Same kind of thing as the UPS for you, Frank.
Exactly. Yeah. When you're gapping into new highs on positive responses to earnings, if you have any interest in trading that company whatsoever, I think, Matt nailed it. You put it in a watch list, and then you basically identify what you need to see. Right. And somebody out there might say you buy it right here. Right. That's not what I need to see. But I do think, that shows strength. We've got, a good, strong technicals before that. Right. So that's just a continuation. So it's just, again, you got to let things develop to where you're comfortable trading into them. And just like Matt and I will never say we're going to buy this day. Right, Matt? I think I can speak for you in that regard.
No, it's never going to happen. In fact, you could ask Frank, you could ask me on any gap that looks like T-Mobile or Zillow right now, and we would say the exact same thing without even
and sometimes they do. Sometimes you wish that you didn't say that, right?
Absolutely.
Sometimes they get cooking and just go running. You're thinking, man, I'm a wimp, but you got to be comfortable with what you're trading, right?
Frank, if this was a no profit taking day on Zillow or T-Mobile, it's a little bit of a different analysis, right?
Sure, absolutely it is.
But when you have the cash open, you test up, come right back down. That does change it. The post gap market cash open response is important in assessing what type of gap that is. And so on T-Mobile, on Zillow, I think it's pretty easy. You have a muted response on the cash open after a positive overnight response. You gotta wait for it to set up. You gotta wait for that high base, or you gotta wait for the retracement. It's those two you're looking to make. If T-Mobile was at the highs, if Zillow was at the highs, you could look at it from a momentum perspective. Absolutely. Now, Frank and myself probably still want to do that, right? We're going to miss out on those types of things. But that is a different analysis than when you have, a mixed reaction following the cash open.
Absolutely.
Mm-hmm. One more for me, and kind of a stock I have not looked at in years, by the way. Groupon, GRPN, if you can hear Maddie. The stock was up huge today. Now, remember the IPO, remember the popularity and all that kind of stuff. This stock has completely been blown out of the water with no interest, but they came out for the very first time, Mark, in almost forever and had a really good quarter. They actually, the revenues were up, things were interesting. Mark, when you have a company that you haven't traded in years that you thought was dead to rights, do you have any interest when it hits a news wire like that to start looking into it?
Yeah, I mean, sure. Like, you got to keep open mind, right? It's like, like you got to keep an open mind. Like, and when something reinvigorates itself, there's nothing wrong with putting it back on a watch list, diving a little deeper, right? I mean, there's been a lot of examples, and there will continue to be a lot of examples. I mean, how many people had Microsoft dead to rights? How many people had Apple dead to rights?
Nobody had Microsoft dead to rights like Groupon. Nobody.
So
not one person in
the
human
general
history.
point remains Microsoft stagnated for a decade.
Let me say what I'm going to say on this one. I'm shocked you brought up Groupon.
Your chart looks different than mine.
I get it. You saw it on a scan. I get it. Move on. Nobody should touch this company.
That 20-to-1 split, by the way, is throwing your chart off a little bit.
No, I know it is. I know it is. I just don't believe in Groupon's business model.
Yeah. Coupons in a pandemic, you got less money. Maybe you got to get back out there, get those takeout orders for cheaper. Frankie, I haven't traded the stock in years and years.
You've already surpassed the over-under I personally set on before you even mentioned.
I don't care about Groupon. It's a general question. Do you ever bring back a stock into your radar that you had thrown dead to rights, that you had no interest in, and that kind of thing?
Yeah, like Mark said, I think you keep an open mind to it. I mean, that's not something I'm looking for. I'm usually looking for, things that are already showing strength, right? I'm kind of opposite, Mark, from that point of view. I'm usually looking for things that are showing increasing momentum. I'm not a bottom feeder type of a dude, especially when it comes to trading. So it's not something I'm going out of my way for, but if I bumble into it, yeah, I mean, I'm open to forgiving. One day I might forgive Boeing, but they've been on my list for a year and a half, right? They're dead to me, no different than Grubhub. And so one day, can I forgive them? Sure. I don't know when that'll be, and I don't know if it will
not
be
today,
but it can happen.
Yeah,
no,
today.
not today.
Do you want me to analyze BlackBerry next?
Or we could bring up. I'll tell you,
I can try to go bring up a Blockbuster chart, see if we have interest there.
No, bring up GoPro if you can.
Oh, we can bring up.
Shots fired.
Bring up GoPro. I'm more than willing to bring up GoPro.
The GoPro's been on fire. It's doubled.
Listen, you thought you had a winner there, Tim. You didn't.
It was in the news today. It wasn't just a random shot in the dark.
Yeah. Now, Tim, that was a good.
You tried.
That was a good transition.
For effort there. Good job.
They actually had a loss on their.
It's like I told my daughter the other day, Tim. I pat her on the back. It's a good effort.
Yeah, good effort. I like it. Speaking of good effort, I'll tell you who does a great effort every day is Frank on Twitter. Frank, on Fridays, one of the things that people show up for is because you always bring some charts to take a look at. Obviously following Tackle Trading on Twitter, it's a great follow. PH this week, I saw KNX this week, Lowe's. You've been, pushing out some really interesting charts. Frank, where do you want to start here? I know you got a bunch on your radar, so.
Oh, let's see. Let me bring up the Twitter. We talked about Lowe's last week, and I think they were on the option report this week. Finally cooking. Took a little while. You don't control when things break out, right? You just control how you respond to them. And the one thing I've definitely learned as a breakout trader is you never know who are going to be the ones, right? Why is somebody going to go crazy like GSX, right? GSX broke out. Stock report this week had them, talked about last week. I'd be lying through my teeth if I said I knew that was going to happen like that. Big movement on something like GSX. You just never really know, but you do know that the pattern is, well, at least I believe the pattern is repeatable moneymaker over the course of time. Lowe's kind of jumps out to my mind. Parker Hamlin, that's an interesting one. Let's take a peek at PH here, Maddie. see how they're holding up here. Talk a little bit. Yeah, guitar, it was, man. It was, yeah, I wish I knew that that's how it was going to play out exactly. I could really take credit for that. So, but you're seeing more and more charts that look like this, this PH here, where, especially if we go back into, either yesterday morning when we were first pushing into that resistance, we've kind of, had that deeper pullback, gone sideways, and are trying to fight through some resistance zones. So that's always going to be a breakout. It's not kind of the clean top of the chart breakout, not the clean high base, top of the chart breakout. But at least in my opinion, anytime a stock breaks resistance, it's a bullish signal.
Mhm.
Whether or not it's a signal that you'd want to trade is a much different discussion, right? But it's hard to break resistance. Sometimes we forget that. Sometimes we think, oh, it's just going to push right through that resistance because it's a clean line. We all do, right? But it's tough to break resistance. So that was definitely an interesting one. One thing that's I'm excited about really is now that we're coming through earnings, it's always tough. It's always tough to find good trade setups that don't have earnings in the way, right? Or the earnings just chopped up your chart a little bit.
Yeah.
And so I'm excited to be able to share some more candidates that are kind of business as usual type of candidates as we kind of start getting into the next few weeks, get these earnings behind us.
Mm-hmm. Yeah, and even like that TMHC chart that you were tweeting out yesterday, Matt, give me a quick peek at TMHC, and obviously you've got a little post-earnings situation here as well. It
What's
just
the symbol?
TMHC.
Yeah.
So now that you're post earnings, it just gives you different analysis, because you could not have been interested a week ago when it had earnings coming up this week. But now the pullback, whether you take it or not, like a trigger above 24, 26, whatever it is,
yeah, a little
getting
bit
outside of earnings season starts to clarify these charts, right?
It does, especially, on the, these pullbacks. Breakouts are funny because, I'll always try to post them and then it's almost like either they don't break out, they take forever, or if you weren't looking at it at that moment, like MasterCard, right? This week, earlier in the week when it was breaking out, quickly throw it up there. But by the time the day is done, it's like, well, what do you do with that, right?
So, yeah, you post the breakout and then it runs following the breakout. And then it's like, well,
yeah, on the one hand, on the one hand, you're like, I look good by doing that. On the other hand, it's like, didn't do a lot of people a lot of good if they weren't looking at it at that moment, right?
Timing is important when it comes to short-term trading.
Absolutely.
Very important.
Mm-hmm. Love it. And by the way, at Tackle Trading on Twitter, make sure that you're following. Ilka even gave you a little comment there or compliment there. He says, I love the Twitter account and I've taken
I love Frank on Twitter.
Yeah.
I
appreciate
that.
Frank on Twitter.
Appreciate it, Ilka. Guys, it's always nice to feel appreciated. I love doing it because, who doesn't like to share charts they find interesting, right? I know not everybody's going to think everything I think is interesting, and I'm perfectly cool with that. Sometimes you probably do think it's interesting though, right? And so I really enjoy doing it. Certainly invite you to join us over at Tackle Trading. If you haven't already, of course, I'm Frank Martin 23 if you're ever looking for me over there as well. But I'm more Tackle Trading. I talk as Frank and I do my work as Tackle Trading, right?
I love it. I love it. I love it. Let's start moving into final thoughts here, Dave. Guys, it's been an interesting week. We still don't have clarity on stimulus. We've got obviously rumblings about China with the executive order, increased risk in that, but the markets remain bullish here in general, above trends. Let's start with you, Mark. Final thought from you, sir.
Man, there is a lot of weight on this market, right? I mean, this is the valuations are high. China doing its thing. Stimulus talks on the verge of breaking down. Unemployment a little bit better than expected, but still terrible backdrop. A lot of permanent layoffs, and yet in all of that, I still sold 3 naked puts today, right? Because I have a system. I have exactly how I do it, and I still look at the charts to help me decide direction, to help me decide confidence. Now, I'm going to be selective in which companies I play, but you still have to trade to the bullish side. And I know and that, like, it cringes me to say that because there's so much, weighing down. But this is a liquidity market. This is a J. Powell market. This is a up market. Eventually that will change. But I'm not going to be the smartest guy in the room that says it's going to change this week. I'm going to be cautious. I'm definitely going to check my leverage. I'm not going to do everything irresponsible. I'm not going to, buy short-term options and have 40 trades with options that expire in 2 weeks. That's just dumb. But still trade to the upside with your system with what's been working.
And Marky, for pro members, you actually have 2 events. So from now until Monday morning, you got one here in about 20 minutes or so.
Well, I'm going to
where
start
you-
that at 1 because I moved it to 1.
Did you move it to
because
1?
The last 3 weeks we've went to like 12:40 in the halftime report. So, you know, we got a lot to say.
The day we're
right?
done on the day
Yeah,
we're
the
done
one day
on
we're
time.
on time, you know,
That's
I'd
how
moved
it
it back
goes.
on the calendar. So that will start at
We're not done on time. This
Time is a
Hey,
flat circle.
And listen,
It's a
and don't even
construct.
think this can't go to 12:40, even though you're trying to wrap it up right now, Tim.
Yeah,
you
yeah,
know?
it's not over till it's
wanna
over.
break down- I was getting ready to break down some technicals for my.
Oh yeah,
podcast.
I've got a few. Yeah, when you get to
Yeah,
me,
I was
I've
gonna
been
say,
waiting here for a
Final
minute.
thoughts take like 15 minutes. You guys can still do
You know, like,
whatever you
if you
like.
Must be
I just have a
hungry.
question out there. Do you think Tim's like really hungry right now?
He's hungry. I guarantee
He's
the
hungry.
first
I
thing
know
Tim's
Tim.
gonna
He's
say is,
hungry. He
"Hey,
like
guys."
wants to go make some lunch.
Ready to
Oh,
get
the
some-
over/under mark on us getting done and Tim saying, "Hey, can we take a break for the scout report meeting so I can go get some food?"
Yeah, like oh my goodness, Tim
Yeah.
likes his food.
Yeah.
All
When
right,
you're hungry,
I do
hungry.
want to break down some technicals on the market very quickly though here, Tim, because I think we're all a little bit more cautious because of the headline news the last 24 hours, but I am more cautious because of the technical situation in the market coming into the weekend than I am the overriding news. We've been dealing with anti-Chinese news out of the U.S. government for 3 years. We've been dealing with tit for tat with China since 2018. So I do think the market is, even though there's specific risk in certain areas, like we looked at Activision today, we looked at, what was the company? I can't remember the symbol we were looking at. I believe it was GSX. I mean, if you want to take a look at kind of how that type of news can impact a company in the short term, just take a look at GSX. Wonderful breakout, price appreciation, got hammered today. Why? It's a Chinese company. It's a Chinese education company. And so obviously that type of news is going to impact certain companies. But when I'm looking at this from a technical perspective in the S&P 500, to me, it makes the analysis really simple to navigate the news cycle. When you're looking at this market from a trend pattern, support and resistance perspective, you're really looking at a market that finds a base right there at about 3120 and it flies all the way up to about 3178, 3180. So it moved up about 160 points. In the next movement up, you went from a really kind of 3190-ish all the way up to 3350, which is about 100 and, what would that be? 160 point movement there. So you're at the top end of your range historically from where before the market starts to either retrace coming back down or consolidation to a certain extent as well. So in the broad market, you're simply overextended from a short-term historical pattern perspective. And what we've been seeing in the market over the last couple months is we are getting back to some degree of traditional technical analysis from that perspective, where things just don't go parabolic in the market. There's a structure to the market in when to get in, when to get out, when to lock in profit. And when you're at the top end of the range after, over the course of the last 2 weeks, 1, 2, 3, 4, 5, 6, 7 days in a row, and this is the first red day. I know one red day in 2 weeks, people are going to freak out like they're new to the market, but the reality is you're just overextended in the short term. You're overextended in some of those stocks hitting resistance. Obviously, you're going to look at it taking in a little bit of profit here. So to me, technically, you're just overextended, and that the news today gave them ample reason and justifiable reasons to lock in profit here. But one small red day does not make it bearish, right?
No.
Yep.
Now, so what you're looking for here on the S&P.
No, Matt, I just want to add something because it directly just what you said. I know it's been a few weeks since this happened. The market's not red over. Remember, like a month ago, 6 weeks ago, we would have these days all the time where tech sold off and and other things went up.
Yeah.
The market's not green. It's clearly divided. So all you have is a sell-off in one area, other areas going up. That was normal. I mean, we haven't had that for a few weeks, but that was very, very normal.
It's exactly, Mark. Wonderful point there. So I don't think we should overreact to the news headlines, because I don't think the broad market is overreacting to the news headlines. And until the broad market overreacts to the news headlines, then we should be concerned. I just think you're overextended here and you're locking in some profit in that short term. Now, on the NASDAQ specifically, which has been the leader in this market from a trend and pattern perspective, we've seen this song and dance a little bit on the NASDAQ as well. You know, you saw a breakout here and it didn't fly, it consolidated. You see the breakout here, it didn't fly, it consolidated. The last breakout that flew was all the way back in May, guys. That was the last breakout that flew here. You did have a breakout there that did pretty good here. But what I'm looking at here is, once again, you're up quite significantly in the short term on the NASDAQ off that support bounce at 10,400. You're all the way up to the top end, up about 10% in this type of price movement. You were running coming into the breakout. Now, Frankie, you know this about me. I don't love breakouts after they've ran. I just feel like they don't have the legs to continue to move that type of momentum. So you were running coming into the breakout, a little bit of consolidation. I like two different levels here to keep an eye on. The first level to keep an eye on is the breakout channel right there at the significant whole number of 11,000. It's right there where that 9 EMA is as well. So keep an eye on this, on that support level. That support level certainly could hold, form a little bit of a base, play a little defense there. I could certainly map out that 11,000. If the 11,000 doesn't hold, you got that rising 20 right there at 10,800. Anything between these levels here, which is about a 300-point range, you still got to see that as a buying opportunity. If that 20-day moving average is broken at 10,800, you're back down into some degree of neutrality at that point. So even though we're overextended coming into this, I do think we're going to have some pretty important market days next week where we test these support levels. And if those support levels hold, I think you're going to have a wonderful buying opportunity in the tech space in the short term. If those levels do not hold, we have a different beast on our hands.
Frankie, any final thoughts from you, sir?
Well, I've got a couple final charts. So, of course. I'll just, I want to start with one of Mark's.
How many stocks do you scan when you do your weekend scanning? Because I know you're going to be doing a Wednesday webinar next week on scanning and whatnot, screening.
Yeah, it's going to be fun. Yeah.
Do you go through like hundreds, thousands? Like what's your routine?
700 to 800 will just depend. A little bit more these days because a few stocks have crawled up in market cap. I typically, don't look for things that are smaller than small cap. And so, I don't really count them, but it's somewhere between 700 and 800, generally speaking. So it's always a fun task. I can't help it. I get up at like 5:30 on Fridays, and then I'm going to be so tired by the time today is done. But I want to get a jump start, right? So, all right. So one, I thought it was interesting because I know that Mark's brought these guys up a few times, and that's Williams Companies, WMB. Are you still a fan, Mark, of Williams?
I am. Dividend appears to be safe. So, yeah.
So you got a little bit of dividend. So we had that a pop on its earnings, right? Taking out resistance, clearly into an old resistance zone, drifting back into the moving averages and that old resistance level. Can you see a scenario, Mark, and maybe not specifically right now or Monday morning, but could you see a scenario from a trader's perspective where potentially could look to buy into this pullback?
If it pulled back a little further, I'd sell a naked put at the 1850 level. That's how I would play it. You had a nice range there. So, I mean, that's how I'd play it. I'd want to get down to that range, the support levels.
Do you have any concern that it would violate the 200-day moving average? Because that'd be a stay away from me.
No, I mean, I've seen the price. This is a company I follow every day, and every time it got down to that level, not only did it bounce off the level, the price level was ferocious to the upside. So, I would treat this as a range-bound stock until you see otherwise.
Okay, interesting.
Can I just say what I see here too on WMB? I think from a trading perspective, Mark, you might be talking more of a position type thing.
I am totally.
Yeah, as a trade, there's no trade if you violate $20.
No, I think it's important. You've got the old resistance zone that we broke out of on the earnings day. You've got basically the 9 and the 200. and
And
potentially
that significant whole number.
the nice round number, the
Oh,
20
I wouldn't be
should be.
surprised to see 20 or hold or a pivot here on the 9 and then go up. Oh, I totally get the trade there. I think it makes a lot of
Would
sense.
you guys agree that you're looking for this as a standard bull flag bullish retracement anywhere from right now to $20?
Yes, I would
So
say that
step
that's
system mechanics anywhere from 20.
Oh, yeah, that's a perfect step system mechanic
okay.
setup.
Yeah. And there's some really wonderful things in the simpleness of that chart. You know, the high range candle and the green candle.
I just love the
volume.
I love
all
the
that kind of
Frank tried
stuff.
to ask, hey, Mark, would you buy this company that you really liked as it's going higher?
Yeah,
It's
we
coming
well,
down.
it's
at
dropped,
some point
3
we will
days.
realize not to ask Mark on breakouts.
Well, that's
I
why I
was
brought them out specifically. I figured I'd toss Mark one. How about CL, our old friends at Colgate?
I haven't looked at Colgate's chart in forever.
And it's going to be fun to look at like a weekly chart on these guys, Matt, and then come back into the daily.
I like the daily.
The daily, and I think that leads to an interesting discussion on the daily itself. But let's take
the breakout is $78 here.
right. So we've got some major resistance on top of us, right? I mean, that's, it's even cooler looking when you look at the monthly, to be
Frankie,
honest with
what do you think about this one then? Because I do like the bullish retracement on the daily. I mean, the bullish retracement, good strong trend coming into it. Snapback retracement into the moving averages, kissing off the old resistance level. You scale into this with the retracement, and then you add if it breaks out. You target one, the breakout is 78. If it breaks 78, you add to the position.
That's kind of where my head is. I think you have to be comfortable with that resistance being your first target, and that has to fit within your rules, whatever they might be, because I think to assume that it's going to break that resistance is a bit presumptuous. Probably shouldn't do that. But with the pullback that we've seen, I think that is very much on the table. And I think that's a legitimate way to play those type of scenarios where, you do scale in, take, a part of the position, whether it's half, a third, whatever, just leading into the breakout, right? And if it just stalls out at resistance,
you cannot anticipate that breakout. That 77.5 to 78 level is very, very, very strong historically.
Yep.
So either one, you scale into it with the retracement, or you just wait for the breakout.
Agreed. I thought that was a really interesting one.
Good find there, Frank.
Another one fighting some pretty, and not nowhere near the same significance, but some interesting resistance is our friends over at T. Rowe Price, TROW. So back in the beginning of the year, before the market sold off, we were bumping our noggin right at this price point. Things were pretty good, strong trend coming out of the commission structure changes. Here we are again, knocking on that same resistance level. Can I talk you, Maddie, into a potential breakout if we take that out? We'll call it one. What do you want to call it? 140, just to give it a round number.
I would say any close above 140 here, Frank. I know you got the ticket 140.45 today, but a close above 140, that ticket tested up, guys. And then, like Mark pointed out earlier today, the market started selling off about 20 minutes into the halftime report. So, T. Rowe kind of took that on the chin as the market did. So, you're a little concerned with that tick, but I think any close above 140, you trigger above the high of whatever that close is. And yes, Frankie, on this breakout, you could sign me up for it for a couple of reasons. Number one, I do like that historical 140 support level. I also like the fact that as it ran into it, it didn't break. It consolidated for a good couple of weeks. Now, why is that important? Because again, I'm a step system trader. I am a rules-based step system trader. Right. And when you're looking left to the chart and you're saying, okay, we got that 140 level, and if you break, you got clear error. But look at the run the RSI had coming into that breakout. You were topping out at about 80 right there. You tried to test the 140. You were topping out at 83. But over the last few days, and this is why patience is so important and system is so important, look what RSI has done. It's consolidated, coming back down. You're underneath the all-important overextended 70 level. And then if you break out, all of a sudden now you have room to run again. So yeah, because you're now got a little bit better valuation from an indicator perspective. I could see the 140 breakout, and then it's standard system. you wait for the confirmation of 140, especially in light of what happened today. And then you trigger above the whatever intraday resistance, including the high of that confirmation candle.
So yeah, I think that's kind of where my head was with that as well. So always interesting to hear. Now, what about a breakout that's actually happened, Tim, on CFX, or if it hasn't, it's sure as heck darn close. CFX, Colfax. Little bit of a cup and handle that it's formed over the last couple of months on these folks.
I like that for a lot of reasons, Frank. The RSI has room to go up. Your post earnings on the breakout, I know you ran a little bit into it, but not a lot. You had a higher pivot low. That grabs my attention. I think you can have that on watch list. Yeah.
So,
I wouldn't play it today, maybe on Monday.
So either confirmation upward movement on Monday or let the first swing go and look for the pullback, probably depending on.
I got this confirmation today.
I would call it confirmation today as well.
I'm just not in the mood of clicking a new trade in on a Friday.
Well, I would say that,
but that's important, Tim, because if it's confirmation today, you're looking to trigger on Monday.
Mhm.
Right. Yeah.
Not confirmation today, you might need to see a Monday action. So I do think it's important to distinguish the difference between confirmation and not.
Mhm.
It's a tough candle though, and I could understand the argument that says, okay, yeah, and I think, Frank, we were saying it's confirmation because it's breaking out of this, and we don't care that much about that candle, right?
Right.
But I do think if somebody did care about that candle there on that breakout of the 200-day moving average, you would put that range into the 32.5 to 32.75. So I do think it's debatable whether it's confirmation or not. For me personally, I think a close above 32, 32.20 on this would be confirmation.
Mhm.
So that's kind of where my head was with it as well.
One of these days, do we have to have the discussion? We need to run the stats for the last 4 or 5 months because we're all hesitant to do a trade on Friday, right?
Oh, it's
Man, Mondays
mental.
have been so
They've been good.
freaking
It's
good.
mental.
I'm not as hesitant the last say 4 or 5 weeks. But Mark, right now I am hesitant because of the news cycle in the last 24 hours.
Mark, I hold over the
that's fine.
weekends. I'm not going to change my approach I've had for years. I just don't trade Friday afternoons. I just don't.
You're
Early
old
in the
and
morning on Friday.
stubborn. Is
That's
that what I'm
true.
hearing?
Because I know what the data is going to say, Mark. Mondays are bullish, especially
It's the data will say over the last 4 months the Mondays are bullish, but can we also do the exact same thing on any day that ends in a Y? What percentage of those days are bullish as well?
They're all good, dude.
They're all good days. They're all good days.
Unlike you, Tim, I've lost 27 years in age in 2020 because I'm now like trading penny stocks and Bitcoin and I'm just
I'm getting older. You're getting younger.
So
Yeah.
There you go. There you go. One other one, and it's going to need some development.
Yeah,
but
instead of Mark buying a fancy Lamborghini, he starts buying penny stocks.
So that's where you know.
Pretty soon I'm going to be looking at the new Tesla models. So.
So nothing wrong with that. Nothing wrong with that, Mark. Okay, I got 2 more I want to look at. I do want to look at one of Mark and I's favorite REITs. At least I think it's still one of yours, and that's Prologis PLD. They had a big breakout on earnings, right? Broke out, have had a nice follow through. And have spent the last couple week and a half probably developing into a little bit of a range. Now these are, they're a REIT, right? So they're not a tech stock from a movement perspective. But Mark, and again, you're going to have to put on your trader's hat here and not say you'd sell a 92.50 put.
It's such cheating. It's such cheating.
And again, it's really still up in the air. Right? I think in a situation like this, it's really important that we kind of hold up here. A deeper pullback can be a different type of trade, say a pullback to the breakout point, but that's a different beast, right? If we are able to continue to consolidate up here, could we think about, even though we're talking about a REIT here, a little bit of maybe a re-entry on a Prologis?
Not from a pullback unless it's deeper and you get a different pattern. But if you go back to that PLD chart, the last breakout treated Prologis well, right? Like I always like to know the stock's histories. So we traded sideways for a good month and a half, 2 months, and then you broke out of that 97 resistance level, and you had a nice 4, 5, 6 day stretch. So like a consolidated breakout, give me a couple weeks, high base pattern breakout. I like that.
That's what I'm
Real,
thinking. Yeah.
that's a really light pullback though. With
Oh
not a
yeah,
lot
the pullback is not. Yeah,
Oh,
I would 100%.
that's a high base. You're looking for the
I think
breakout.
we're looking
So-
for this base, and again, maybe 3 weeks from now, if we do get that deeper pullback and test that breakout point, we could talk a little bit.
So yeah, the last breakout, like don't like when one breakout treats you well, guess what? The next one probably will too.
It certainly
You
can.
trade it. You trade the pattern until the pattern breaks.
So
Yeah, just go with the flow.
Specifically speaking of REITs, guys, I mean, REITs have underperformed the market for a long time now, but we're starting to show a little life in the REITs. Are you guys getting interested a little bit?
A little bit, yeah, a little bit. I've seen that as well. A few more. I mean, again, they're REITs, so they're not maybe a swing trader's idea of a top priority. But
I'm more interested.
I wasn't
in
thinking
utilities.
like let's get into a 3-day trade here.
No, within the same space though. In concept, I like utilities a little bit better right now. I do see the REITs improving in the chart, Matt, but I think the XLU is knocking on the door here, and I found some good utility potential breakouts.
Yeah, I got them ranked at the exact same.
Mm-hmm.
keep
Maybe
'em
utilities 5 points above, I would say.
pretty close. Did you run into PEG on your utility?
I did. Yeah, PEG was on my list. Yeah.
PEG's an interesting one because we had that real, big move on earnings, what I think it was last week, and then kind of got pushed down a little bit, but we're now knocking on the door of a break. I think you could call that a break above 56-ish if you were looking to add some utilities. Not, I mean, again, utilities are utilities, but I'm with you both actually. I'm more interested in them, and I'm not thinking they're the hip new thing necessarily, but I am more interested than I've been for a while.
Mm-hmm. Just a couple of specific names like this PEG chart. There are some that are developing that are looking like, okay, we're knocking on the door. You always do say though, Frank, resistance is very hard to break. And so until you get those confirmation points, obviously there's not much there until that gets confirmed. But there's a couple stocks in the utility sector grab my attention for sure.
So, absolutely. So hopefully, and I'll just give you one bearish one just for fun, right? You always got to have a bearish breakdown just in case. And that'd be ADNT, Maddie. Sold off of earnings into support, hanging there today. Would like to see it fight there a little bit, for the same reason Matt, on the break outside wants to see it cook a little bit, right, Maddie?
Yeah.
But momentum could push this even further. I mean, that's a lot of negative momentum off of that earnings. The one thing, on the bear side of things, you kind of got to be tight on stop losses these days because it's tough out there for a bear.
If it doesn't run, you want out.
Yeah, it's tough and I'm the type of guy that's willing to sit through, little pullbacks as a general rule, but that has not been the way the bearish world has been recently. So
no, bears have had a hard time.
It's been tough. You see movement and you do sometimes see fast movement, but then it is gobbled back up by the bulls buying, not what I would consider a dip, but it doesn't matter what I would consider, right? So certainly a breakdown candidate. I found a few like that, and that just tends to be kind of where the bearish trades are. But it's been tough.
Mm-hmm.
I'm not going to be looking super bearish, but I do believe it's always important to have candidates on both sides because you never know.
Let me ask you on that, Frank, for a second, because like an AVNT here, I think there's a lot of companies that look very similar to this, right? Mm-hmm. Like even a Chevron or an Exxon or some of the energy stocks, they just never participated as much as other growth areas. Now they're kind of rolling over. Are you more interested in these that have clear error, or like an Atlassian, TEAM, Matt, that are coming off of reversal patterns from the top? Like TEAM is a very different type of pattern for potential bears because you're coming from a high point rather than under the 200 moving average. Like one preference or the other, Frank?
Generally speaking, I prefer the ones that are already testing support, just from a personal preference point of view. But I certainly have no nice things to say about that team chart. If that support breaks, not a lot until what, 158, 155.
Yeah, 158
like
by 150 would be your target.
So I would be okay on both sides of those. I generally prefer things that have already a little bit of established momentum, just a preference thing. But I realize it's a preference thing and not a I'm a right thing.
Yeah, no, reversal candidates like this, I really like them from trading perspective. I do get you're already below the moving averages, you're below the 200. If you break support, then it's gone. There will be some of those candidates, but it's been a very tough market to be a bear, guys, in the last little bit. Maybe that changes, but until it changes, it doesn't. We're still in
No,
an
I mean,
uptrend.
just pull up this, like Cinemark, pull up SNK or pull up AMC, like Cinemark.
CNK. AMC had earnings today, by the way.
Yeah, I mean, go pull up CNK, right? Like, so Cinemark, starting to show some breakdown. And this is what I have seen time and time again. Starts to break down and then immediately, boom,
Yeah.
up 4%. It is so resilient on the downside. It's like you almost got to like short head and shoulders patterns that break support up top.
I like the
You know?
idea of selling, credit spreads above the previous swing, whatever the previous one was, if it can make mathematical sense.
That makes sense too. Like, it's just, it's tough. Those classic breakdowns at the bottom, man, they're just tough.
Yeah. I mean, if you've been
I don't
micromanaging
disagree, but CNK also went down 5% before it snapped back, rallied back into the moving average.
yeah, it's more the micromanagement from my point of view. And
I still like a short on CNK, and I like it a lot under $10.
can't argue with it.
Movie theaters. All right, boys. From the moment I said final thoughts to now, it's now been 30 minutes, by the way. So we've got that in there. It is what it is. I always know that, by the way. I knew we had quite a bit.
We knew
more
you
to
were
come.
hungry. We were going to drop.
I still haven't had lunch, so I need.
Listen, all three of us were like, we're going deep here.
Yeah,
it almost
did that on
sounds
purpose. As soon as they knew what the weakness was, they're like, let's go for a little bit longer.
like hyenas in the jungle when we smell the dead prey.
That's right. That's right. Been a very fun week of shows here, guys. Really enjoyed the Wednesday night webinar.
Yeah, it was a lot of fun hanging out with everybody.
Yeah, Frank, that was just a great time, having all the coaches, your perspective and insight, and Emily and everybody. Matt did a great job with that, hosting and kind of leading the discussion. If you're out there watching right now, you've not seen it yet, watch that replay. Go find it. Cody, I think, has it right at the top of our YouTube page, right, Cody? So people can find that one easily. Is that right?
Yes,
and then, Marky, you're going live with your webinar here in
23 minutes.
1 o'clock Mountain, 3 o'clock Eastern Standard Time.
Yeah, and I think there's some, listen, to tease it a little bit, I think there's some interesting things to close the week off that pro members might want to check in on. So,
and then by way of notification as well, if you've not attended one of the Sunday night preparation classes and you are a Sunday type of person, you want to pop in and get ready for next week. Mark, you're doing that Sunday night. What
Sunday
time?
night, 8:30 Eastern. It is my favorite stretch, the couple hours preparing it. And I'm not even talking from a teaching standpoint, from a personal standpoint. I have found that for me personally, I am so much better with a game plan of what I'm going to do that week by taking 2, 3, 4 hours on a Sunday, 2 or 3 prep time, and then an hour sharing it with the community, just to come up with a game plan. What are the events coming this week? What are the earnings this week? Where's the market emotionally? You get to see the futures open, right? A few hours before. And so to get that initial futures reaction, and it's just, I found it makes my week so much calmer from a trading point of view.
And then obviously, Matt, we're getting ready for our scouting report meeting. That is one of the big things we do. I saw Dina said earlier, you guys got your work cut out for you this weekend. We're gonna have conversations, I'm sure.
These are weeks where I love the scouting report meeting. I mean, when the market's setting up and breaking out, it's like, okay, we have approximately 460 potential trades here. Let's have a debate. But on weeks like this, we go out there and we find the gems, and the coaches do a wonderful job in that. Frank, you guys see just a microcosm when Frank comes on Friday, Frank Day, and goes chart after chart after chart. That is a microcosm of what we do in the scouting report meeting. Where Tim, you asked how many stocks Frank scans. He's usually right around that 800 to 900 stocks that he scans. I literally look at about 1,700 charts in preparation for that meeting, and I try to look at all the. I don't look at small cap stocks, but I try to look at all mid cap stocks and above, and quickly go through my scans. And I actually don't even put parameters for the scans. I literally look at every chart and write down the ones that are setting up for us to have a debate on. So we go through a ton of charts trying to find those gems for the scouting report meeting. And I'm excited to get in there with the boys and the girls today.
It's always fun. It's one of my favorite things every weekend, and just right at the end of the meeting as well, just kind of hanging out with the coaches, the crew. The
It's my favorite part of the
camaraderie.
week, the last
Yeah.
30 minutes where we just we're done.
Yeah.
We're done with the week trading. We're done with the volatility, and we just hang out and just shoot it a little bit. That's also very enjoyable.
Always fun times for sure.
Yep. Great job this week, guys. Thank you, Frankie, for being here. I appreciate you as always, sir.
Hey, it's my pleasure. Always enjoy doing it. Looking forward to our marathon on Wednesday next week as well. So make sure you pop in anytime throughout the day. Right, we're going overtime and then some.
Oh,
Yep.
We're going ham on Wednesday.
Yeah, and by the way, I'm glad you reminded me there, Frankie. Next Wednesday, we're going to be live here, guys, from the halftime report all the way through our nightly show. We're doing a 6.5 hour. What are we calling this? A marathon? I think they used to have the old telethons, right? Where like they would
There you go.
have acts going on forever. You
Not doing a telethon.
Who's man of the phones, Cody?
It's the Tim doesn't get to eat day.
Tim doesn't get to eat. No, I'll just have to have some food right here on my table, Marky. I'll figure it out. We are out here for the weekend, guys. Enjoy. If you've not done it yet, click that subscribe and bell. Come back and join us. We do this show every day. The markets go live. And if you're not yet a pro member, perfect time to give it a test. There's a 15-day trial in the comments below. Get the weekend reports. Join the webinars with Mark and get ready for next week with all of our content over at Tackle Trading. Until next week, guys, have a great weekend.
Bye, everybody.